be covering in this course on day trading with pivot points and price action. First session will be introduction of pivot points, CPR and price action. be covering in this course on day trading with pivot points and price action. First session will be covering in this course on day trading with pivot points and price action. First session will be covering in this course on day trading with pivot points and 15 day trading patterns and strategies. But I can't just go to the strategies directly until I can cover the basics. So that is why first session will be mainly basics. Second session will be mainly about the patterns and strategies. Okay. So first session will only focus on basics. Because if your basics is strong, if you are strong with basics, then it is easier for you to understand the patterns and strategies. If I directly go to the strategies without discussing basics, you will find difficult to understand the strategies. First, we'll start with the basics of pivot points, basics of CPR, and basics of price action. Then we'll discuss about the secrets of CPR and pivot points in day trading. Why I am saying secrets of CPR? Because you will see that sometimes CPR working very well, sometimes it doesn't work very well. When it is likely to work, when it is not likely to work, I'm going to discuss in this part. Then we'll discuss about the price action basics and powerful candlestick patterns in day trading. After the pivot points and CPR, we'll discuss about the price action as well as candlestick patterns. Then next will be how to prepare and mark important levels on the chart for day trading. If you are a day trader, you should remember, even though market opens at 9:15 in India, you should be ready at least 30 minutes, 45 minutes before market opens. Before market opens, you need to know where are the important support resistance. Okay, where are the important locations, important levels. You need to know those levels and you need to mark those levels, and then only you should trade. Okay, because these are the important levels. Day trading doesn't mean that you have to trade every minute, every hour. You should trade only when you see important levels, important locations, important support resistance. Only on those levels you have to trade. For that you need to know important levels. For that you have to go to all the time frame, like higher time frame, daily time frame, bigger time frame, right? Like that you have to know the important locations, important support resistance. That all I'll be discussing in this part about the how to prepare your chart before market opens. Okay, so that will be the end of session 1. After we cover all the basic things, then we will move to the session 2, where this will be the main important session, main crux of this course, that is where this will be patterns and strategies. So here I am going to discuss my 15 patterns which are repeatable patterns. That means in day trading you will see keep repeating those patterns, and those patterns I'll be discussing here with the strategies like entry exit strategies. Okay, so this will be the main 15 pattern strategies I'll be explaining with the charts. Okay, so you will see with the charts, with the historical charts. Next one will be most powerful moving average and how to use it in day trading. Let me tell you, I'm not a big fan of indicators. Okay, I don't use indicators like RSI, MACD and all this kind of indicators, but one indicator I use, that is moving average. Not every day, I don't use it every day. Yes, occasionally I use it on only specific days. Which moving average I use it, on which kind of days I use it, that I'll be discussing here. Then finally in this second session we have a options in day trading, using options in day trading. Remember, it's not a course on discussing about the options. This is not a options course. This is mainly about the taking directional based trades. If you know the direction of the market, then you can trade in future or option, whichever instrument you want. First is the direction. You need to know the direction of the market. That is the objective of this course, where I'll be discussing the how to take the trades based on direction. After that, you can trade in future or option. But the main option, if you want to trade, you need to have some good knowledge, at least basic knowledge. So don't trade in option until you have basic knowledge. So this course is not to discuss too much of options basics. If you want to learn option basics where you can learn, that I'm going to discuss here. But I'm going to just discuss option is better, future is better. What are the differences? Buying option is better. After that, you can trade in future or option. Also, but the main option important to trade. Buying option is better. After that, you can trade in future or option. Also, but the main option important to trade. Remember, buying option is better. That you can trade in future or option. Also, but the main option important to trade. Remember, buying option is better. That you can trade in future or option. Also, but the main option important to trade. Remember, buying option is better. That you can trade in future or option. Also, but the main option important to trade. Remember, buying option is better. That you can trade in future or option. Also, but the main option important to trade. Remember, buying option is better. That you can trade in future or option. Also, but the main option, because remember, these are the practical sessions. This is not a theory that I'll just show you slides and I'll just keep explaining it and you will keep reading it. No, this two sessions will be mainly based on practical. That means you will see along with the charts whatever I'm explaining here. Then we'll come. Or some also have that mindset that the higher the accuracy, that means more money I'm going to make. I need a strategy which has a 95%, 90%, 99% accuracy, right? That is what novice mindset. That is what new traders always think. That is how money is made. Always, constantly, they are looking for strategy with this accuracy. If you are still thinking like that, still you are searching for that kind of strategy, then I have a bad news for you. And that bad news is, I have been in market for more than 15 years. Okay, I have not seen any strategy with this kind of accuracy. There is no strategy was 100%, 90, 95, 99%. So that means what? That means you should stop searching for a holy grail strategy. Okay, no strategy was 90 to 100%. Then you may have a question. That means, do I need a strategy? Can I get a strategy which can give me 80%, which can give me 85% accuracy? You know what? You even don't need it. Then what do you need? You can become a profitable trader even with a 50% win rate. That's it. That is the good news for you all. That means you can become a profitable trader even with 50% win rate, provided you follow this. This is what most important in trading. That is why risk reward is called holy grail in trading. That means if you follow 1:2 risk reward, okay, if you follow this risk reward and if you have 50% win rate, you can become a profitable trader. So when we go to this session, risk management, I will show you how much profit you can make with just 50% win rate with 1:2 risk reward. Okay, so that is why don't run behind holy grail strategy, 90%, 95, 99% accuracy and all this. There is no strategy. As far as I know, I don't know any strategy can give 90, 99% win rate. You need just 50%. That is what you need to remember. This much win rate also enough to become a profitable trader. Most important is this. Okay, risk reward. How to do position sizing in trading? Remember, I just said to become a profitable trader, you need to focus on this risk reward, right? If you follow this, you can become a profitable trader. Now, what is position sizing? Position sizing will not help you become a profitable trader, but position sizing will help you to survive in this market. Remember, if you are new to trading, new to stock market, your first goal should be this. Before even think about profit, first focus on survival. That means people who survive here, they are likely to do very well, because trading is something every day you will learn something new. Okay, every day market teaches you something new. So trading is like that. It's like a process where you keep learning as you become experienced in market. But for that, people don't even survive to get that experience. Within 2 3 months, they blow up their capital, they lose all the money, and they will leave the stock market, they leave trading, thinking that money can't be made. Trading doesn't work. Trading is gambling, trading is a manipulation. They keep cursing, but they don't understand that they are losing money because they don't have the knowledge. Okay, so that is why you need to think about survival first, profit comes later. Survival means what? Survival means protecting your capital. Focus on this first. Okay, protect your capital first. So once you ensure that you protect your capital, that means your losses are never big, that you wipe out your capital. Small losses are part of trading. Okay, so remember, trading is not something that every day, every minute, every hour you will make profit, every trade will give you profit. There will be losses. Losses are part of trading. For that you have stop loss. But good part in trading is that you can control your risk. Trading is not something like you put your money just like a casino or a gambling, where either it will become double or it will become zero. Trading is not like that. Trading, you can control the risk. Suppose your capital is 2 lakh rupees. Before even taking the trade, you can decide how much I am going to risk. Am I going to risk 1000 rupees out of my 2 lakh, 2000 rupees, 3000 rupees? That is the beauty of trading. That means you can control the risk. You don't have to wipe out your 2 lakh rupees in a single trade. You can decide your risk. How much you are ready to risk? 1000, 2000, 3000. That is how professional traders do. Professional traders are not successful because they have some magic indicator or magic strategy. They understand this concept that position sizing is important. Position sizing will help you that your loss is always within the limit. Okay, your risk within the limit. So that is what position sizing all about. So that is what, focus on survival first. Once you survive, once you learn trading, then only you should think about profit. Don't directly jump into trade thinking that I attended some training and tomorrow only I have to become a profitable trader because I attended training. That may not happen. Okay, it will take time. It needs experience, practice, everything. And for that you have to survive. How to survive? You need to learn this. How to do the position size. That means before taking that trade, every time you need to know how many lots you have to trade. 1 lot, 2 lots, 3 lots, or if you are trading in shares, in equities, 100 shares I have to buy, 200, 150, 300. That all position sizing will tell you. And that depends on your capital, how big or small your capital is. Okay, so that I'll be discussing here. Then I'll discuss about the 5 rules of risk management. Remember, trading is not something like just strategies. Trading is also about the being disciplined, following the rules. Like any other profession, people are successful in the profession because they are not only good in their skills, they are also disciplined. So discipline also very important. You have to follow the rules in trading. You may have a very good strategy, but along with strategy, you need to follow some rules. What are those rules? I will discuss here. Then trading journal. What is trading journal? Why it is must for all day traders? You know that people always say that I lost so much money, I lost that much money, I lost this much money in trading, right? Why it happens that people keep losing money? Why most of the people lose money in trading? Because people come to trading with a gambling mindset. They don't have any plan. They just come here just to try their luck and end up losing their money. That is like trading like a gambling. When you go to gambling, you will also go and try your luck, right? Trading also they think same thing. But remember, you need to have good knowledge before you start trading. And most importantly, you need to take trading as a business, not like a gambling. That is the difference between professional and a novice trader. Novice trader takes trading as a gambling, end up losing everything, and professionals, they treat trading like a business. You may have some other business, whatever the business you are doing, you know that you will have a records, right? Everything you will keep a records of your business transaction. Like you'll make a folder, you'll keep all bills, invoices, right? You will have all the data of your distributors, vendors, customers, clients, everything you will make it professional way in any business. But in trading, people don't do it in professional way. They take it like a gambling, and you know that in gambling what happens, eventually you lose money. So that is why don't treat trading like a gambling, treat trading like a business. Okay, so that is what I'll be discussing here in trading journal, why trading journal is important and what is the trading journal, everything. So if you want to become a professional trader, then it is very important that don't treat trading like a gambling, treat like a business. And trading journal, it will help you in maintaining your records. Every day after market closed, you have to maintain your records, daily trades, which trades you have taken, how many points you made profit or loss, how many trades you have taken entire day, what was your risk reward in that trade. In the comment section, you can even write what was your mindset while taking the trade. Did you take the trade as per the patterns or an impulsive trade? Everything you have to write down. So advantage is, even after 1 month, you want to see how was my previous month, how many trades have taken, everything will be black and white. Okay, so that will help you to know where you are going wrong or what you are doing right. Everything will be in front of you. That is why trading journal very important. Remember, this trading journal is in the Excel format. Okay, this is like a Excel format which you need to enter every day. And then the last session, that is session 4, is trading psychology. Many new traders think that they are not successful because they don't have good strategy. But the real fact is different. That means strategy alone is not enough to become a profitable trader. They say that 90% of traders fail in stock market. 10% traders are successful in stock market. And what these people think, why they are failure, why they are not able to become a profitable trader, why only 10% traders are successful, they think that their failure because they don't have any magic indicator or a magic strategy that this 10% traders are using. They think that these people are successful because they have a magic indicator or a magic strategy which makes them successful. Let me tell you something. Why these people are successful? These people are successful because of the 3 things. First thing is that they are successful because they have a strategy with the edge. That means they don't have any magic indicator or a magic strategy that every time, each and every time that strategy works and they make money. Nothing like that. These people have a strategy with the edge. That means they have a high probability strategy. Nothing like 100%. Okay, so they don't have any strategy or indicator which works each and every time. Just they have a high probability strategy. Second reason these people are successful because they are also known to be good risk managers. That means these people are very good in managing the risk. That is what they known as risk managers. These people are good in controlling the risk because they know that stock market trading comes with the risk, but good part is you can control the risk, and that is the only thing in your hand. When you take a trade, you can't decide, right, how much market has to go up, how much it should go up or down, how much profit it should give you, right? That is not in your hand. That market will do on its own, but only thing in your hand is controlling the risk. That means stop loss. Yes, you can decide where you want to keep stop loss. where you want to cut your position if it's going against your trades. That is known as managing the risk, right? And that is what these people are very good in, managing the risk. They focus on the risk more than profit. Their first priority is risk. They focus on the risk so that the risk is always controlled. That means risk is always within the limit. They will never allow risk to go out of control. That is what makes them successful. But this 90% of traders, what they do, they only dream about profit. Every time they take the trade, only they are thinking about their profit. But they don't know that if it goes against the direction, where they have to cut their position, where they have to keep the stop loss, how to reduce the risk. These people don't know about that. These people knows how to manage risk. That is why these people are successful. And the third reason they are successful because of this, that is trading psychology. These people know the importance of trading psychology in trading, and they know how to control emotion during the trading. That means they know how to control their mind, how to stay disciplined. Okay, this is what most important in trading. That is what my experience says. But unfortunately, many new traders, they don't focus on this. They only run behind strategy, ignoring this. Okay, so this is also very, very important. Even though this last two sessions, risk management and trading psychology, small sessions, it's not a big sessions like earlier two, but very, very. So that is what we will discuss, importance of trading psychology, how you have to control emotion during trading, and then we'll close the session and we'll wrap up. Okay, so that is the agenda, or that is the contents, course contents for day trading with pivot points and price action. Okay, now we are coming to the first session, that is introduction of pivot points, CPR and price action. So we'll try to learn basics of CPR, pivot points, everything here. Okay, what actually pivots are? What actually pivot points are? Pivot points are nothing but support and resistance level on your chart. So that is what pivot points are, nothing but support and resistance. When you go to the indicator section in your charting tool, type pivot points and you will see a chart like this, right? You will see a chart with all the pivot points, all the lines mentioned here. All the lines mentioned here. These lines are called pivot points or pivot lines. Okay, you will see horizontal lines like this, like R1, R2, R3, that is resistance 1, 2, 3, support 1, 2, 3. So resistance and supports you will see on your line, on your chart, and this is called central pivot. The central one what you see is called central pivot, and line above your central pivot are called resistance line, and line below your central pivot are called support lines. Okay, that is what pivot points all about. It will tell you where is the support, where is the resistance. Suppose market opens above the R1 pivot, keeps going up, keeps going up, keeps going up. When it comes to the next resistance here, you should know that it is coming near the resistance, right? When it comes near the resistance, either it can break that resistance or it can reverse. Assume that this has broken that resistance, starts going up. Then you should know that it is coming near the next resistance here. Again, it is likely to face resistance. Either that resistance can be broken or it can be reversed. Assume that this time it reversed from that resistance, starts coming down, and when it comes here, this line, now it is likely to work as a support. Earlier it was a resistance, now it is likely to work as support. Why? Because once resistance is broken, next time when price retest, then chances of it is working as a support. That is what resistance becomes support. Once the resistance is broken, next time it is likely to act as support. Okay, so it may come here, it may take support, again starts going up, going up, going up. When it comes back to this resistance again it comes and retests that resistance here. Now it's still a resistance. Earlier was resistance, now also resistance, because earlier that level was not broken. Okay, suppose second time it broke that resistance, starts going up, going up, going up. Next time when it comes back to that line, it is likely to work as a support. That is what resistance support. Until it is broken, it will act as a resistance. Once it is broken, it is likely to act as a support. So that is what the concept of support and resistance. This is just a basic. I'm not saying that this is the strategy. Okay, this is not a strategy actually. This is just to give you brief overview of the support resistance, because this entire course is based on support and resistance. That is why I thought I'll just give you brief about the support and resistance. If you ask me, out of my 15 years of experience in market, one thing which works very well, okay, most of the time, not all the time, most of the time. Remember, trading is a probability. Trading is not like a mathematics or a science that each and every time it works. There is no 100%, no strategies, nothing works 100% of the time. Every time it's a probability. That means it may work or it may not work. So in trading, you need something which works most of the time. If not every time, at least most of the time, right? So what is that? I've seen that which works most of the time in trading is this. This is what I've observed in 15 years. This is what works very well. I'm not saying that support resistance means only pivot. There are many things support resistance, like even previous day high, previous day low, that is also CPR, that is also support resistance. Swing high lows, that is also kind of support resistance. So these are the few support resistances which I'm going to discuss in coming slides. But what I'm saying is that support resistance, you need to master it if you want to become a good trader. Okay, this is what works in market most of the time. Why it works most of the time? What is the reason that support resistance something works most of the time? Because market goes up because of the buyers, market comes down because of the sellers. If buyers are stronger, they will take market up. If sellers are stronger, they will take market down, right? That is how market goes up and down. And support means buyers, resistance means sellers. And you need to know where are the buyers, sellers, where are the support resistance. That is the objective of today's course that we'll be discussing in length as we move forward. So that is what I just wanted to give you brief about the support resistance. So this is the pivot point, and this also pivot point. Everything is pivot point here, but they say this is the most powerful pivot point. That is the central pivot. Out of all these pivot points, this is the most powerful. That is central pivot. This is also pivot point, but these pivot points are known as extensional pivots. Okay, these are the extensional pivot. The most important is this central pivot. This is also important. Extensional pivot also, I'm not saying not important, but these are like minor pivot. This is like a major pivot. That is the central pivot. They say this central pivot is like a heart of your body. They say the most important organ in a human body is the heart, right? So that is what they say, central pivot is like a heart. So this is what the most important, this is like a heart on your chart, central pivot. Okay, now you know about the pivot points. Now what about the CPR? CPR is something we are going to discuss in detail in this course. So what actually CPR is? CPR is nothing but one line above that central pivot and one line below that central pivot. And this entire range is called CPR, central pivot range. Okay, so that is what CPR or central pivot range all about. One line above that central pivot, one line below central pivot, and this entire range is called CPR. Like you can see in this chart, this is the central pivot. The line above the central pivot, line below the central pivot makes that range called CPR. The line above the central pivot is called top CPR. Line below the central pivot is called bottom CPR. That is why I mentioned as a TCPR, BCPR. Okay, and the entire range is CPR. One of the very, very powerful level on your chart. That is CPR. Central pivot is like a heart. It's like a heart of our body, human body, most important organ. This is the most important pivot points. What about the CPR then? They say if central pivot is heart, then CPR is like a heartbeat. You know what is important? Heart is important or heartbeat? Heart is important as long as there is a heartbeat, right? So same thing in trading also. They say central pivot is important, no doubt, but this is like your heartbeat. Okay, this is like a heartbeat of the market. This level is the heartbeat. Most important level on your chart is CPR. If you ask me, out of my 15 years of experience, if I had to name one level which is very powerful, which works most of the time, not all the time, but most of the time works very well on your chart, is CPR. Okay, CPR is something very, very powerful on your chart. In Secret of Pure Boss book, Frank Ochoa said CPR works like a magnet. CPR like a magnet on your chart. What is magnet actually? Magnet is like a attraction, right? Magnet is like a attraction. So like that, CPR also like a attraction on your chart. That means price gets attracted towards the CPR. Price gets attracted towards the CPR. That is what the CPR like a attraction. In the book Secret of Pure Boss, Frank Ochoa said, when he has backtested this CPR, he has seen that 63% of the time price touches its CPR on any given point of time. Okay, 63% of the time. That means out of 100, 63% of the time price touched its CPR on any given point of the time. That itself is good number, right? In trading, I said anything 50% or above is the good number. So 63 is obviously more than 50%. That means having CPR can give you edge in your trading. I came to know about the CPR way back in 2017. And let me tell you, this is something I use very regularly. This is what really gave me that edge. CPR is very powerful. When I say powerful, what I mean by powerful? Remember what I said, what is the central pivot? What is the pivot points? All these are nothing but support and resistance, right? Same thing. CPR is nothing but support and resistance on your chart. This entire range is your support and resistance. Okay, assume that market opened and it is coming down like this, looking bearish, and if you short here, you should know that it is coming near the CPR, because CPR works like a magnet, so very high chances that it is coming near the CPR. Okay, and it is going like this, then there is a very high chances that it is going towards the magnet. That is what the CPR like a magnet. In trading, remember two things important: entry as well as exit. Many people think that they should know good entry, but they don't know that it is also important. Exit also important, not only entry. Both things are important, but many people think that only entry, they don't know about the exit. Why exit is important? Because if you don't know the exit, then there are chances that you may end up losing all your profit. You are in a good profit, but you don't know where to take the profit, you don't know where to exit, and suddenly market reversed and your profit gone, right? That can happen in trading if you don't know the exit. And that is what CPR will help me to give the good exit. For the exit, most of the time I use CPR, okay, as well as pivot points, but mainly CPR. For the entry, for me, most of the time it's a price action which gives me entry. Exit mainly CPR or pivot points. Not always, but most of the time. That means you see that market is coming down, you shorted here, okay, you shorted, and it is coming down like this, looking very bearish, and you think that I will not take my profit because I want to be in this trade because it is looking very bearish. I want to book my profit here in later afternoon. But what could happen? It can come near the CPR and it can reverse, and all your profit gone because you did not take your profit here, and your stop loss hit. That can happen. If you don't know that, you need to take profit here. Or you see that market is looking bullish, you have taken a long trade here and you kept your stop loss here, but you don't know that it came near the CPR and you didn't take your profit. Chances are that it can reverse and your stop loss can get hit. From the profit, you end up losing, or you ended up giving all the profit. That is why CPR is very powerful in telling you where to exit, because when price comes near the CPR, you should be ready to take your profit here. Okay, this is the place best to book your profit. Okay, this is what CPR is all about. So we will discuss more about the CPR in coming slides, and also in the second session. In the second session also you will see most of the time I am referring to CPR, okay, in the exit, everything. So that is what we'll discuss as we move forward. So this is just to give you overview of CPR in trading. What is CPR, how it works, why it is important, everything. Okay, let me discuss few things more about the pivot points. There is a traditional pivot, there is a Fibonacci pivot, there is a Woody's pivot, there is a Camarilla pivot. So there are many types of pivot points. If you ask me which is the most important pivot points, which is the most powerful, I've seen this is very powerful, a traditional or a standard pivot. Okay, this is what I use in my trading, standard pivots. Also it is known as floor pivots. Okay, this is what I use it. So entire this course, entire charts, what you are going to see, if you are confused which pivot is this, you don't have to worry, everything is standard pivot. If you ask me why I don't use Fibonacci, Woody's, Camarilla, because I have not done any back testing on all this. Until I don't do back testing, until I don't know how much it works, I can't use it. Neither I am interested in doing the back testing on all this. Okay, because after all, trading is a probability. There is nothing like 100%, right? This is what I see most of the time working very well. So this is one of the oldest pivot, that is the traditional pivot. So I decided to stick to it. So I don't know about the other pivots, neither I used it. Now let me tell you some secrets about the pivot points. What is that secrets? You know that there is daily pivots, there is a weekly pivot, there is monthly pivots, even you can use yearly pivot. You can use daily, weekly, monthly, yearly. But which is the most important pivot points? Is it daily, weekly, monthly, yearly? Many people think that, oh, monthly or yearly may be very powerful because it's a bigger number, because daily is small, right? Weekly, monthly, yearly are bigger. Now let me tell you one secret. The most important pivot point is this. This is what you should focus more. Let me tell you, this is for day trading. I'm not discussing here positional trading, swing trading and all this, okay? This course is mainly for day traders. This course is mainly for day trading. If you are a day trader, then you should focus on this pivot points. Okay, this is what the most important pivot points for day traders. Next one can be weekly pivot. Okay, weekly is next, first important daily. Monthly, yearly, if you ask me, earlier I used to use monthly and recently I started removing monthly pivots, yearly pivots, everything. Yearly pivots I never used it, but monthly pivot I removed it. Nowadays I don't use it. Okay, so on my chart you will see daily pivot, weekly pivots. But still I say that if you think that putting more pivot points on your chart, it looks more noisy, it gets compressed, chart gets compressed and all this, then if you want you can even remove weekly. Okay, focus on this. This is what the most important, that is daily pivot. Now what about the pivot points? How pivot points are plotted on your chart? Remember, pivot points are plotted on your chart based on daily, for example, daily pivots plotted on your chart based on previous day price action. So daily pivots are plotted on your chart with the average taking previous day high low close. Okay, there is a formula to calculate pivot point. I'll show you that formula as we go forward in this course. What about the weekly pivot? Weekly pivot based on previous week. What about monthly pivot? How it is plotted on your chart? It is plotted based on previous month. That is how pivot points are plotted on your chart. We'll discuss that formula later. So this is where I discussed daily pivots are more powerful than weekly or monthly pivots. In my trading, I use daily and weekly, but I don't use monthly anymore. For day trading, okay, not for positional and swing trading. Daily CPR more powerful than weekly or monthly. Like how I said pivot points, CPR also, there is a daily CPR, there is a weekly CPR, monthly CPR, even yearly CPR you can use it. Again, one more secret, if I have to tell you, the most important CPR is this. Daily CPR is the most important, most powerful for day traders. Okay, not for positional or swing, especially for day traders, not weekly or monthly. So in this entire course, I'm going to show you many charts, and most of the charts you will see CPR, and you don't have to confuse whether it's a daily CPR or a weekly or monthly. You don't have to get confused, because all CPR what you are going to see in this course is only daily CPR, not weekly or monthly. If you are a day trader, stick to this. Don't have to look at anything else. This is what works best for day traders. Market generally trades between S2, R2 pivots, very rarely go beyond R3, S3, R4, S4. What I mean by that, look at this chart. You can see that central pivot R1, R2, R3. You can even have R4. You can even have R5 pivots. But generally market trades between this S2 pivot till R2 pivots. Okay, generally, not all the time, generally this is what market trades between this range. So that is why you don't have to have all the pivots on your chart. You can have up to R2 and up to S2. But having said that, don't think that every time. No, nothing is 100% here in trading. Nothing is every time. Whenever there is a news in the market, whenever there is any positive or negative news in the market, or there is a events in the market, or there is a big trending day in the market, it can break everything. R3, R4, R5, and market can keep going like this, or it can keep breaking every pivots. So that is what I said. Most of the time it remains, but sometimes it can break everything, even R4, R5, S4, S5 also. Okay, so that is what I mentioned here. Market generally trades between S2 to R2 pivots. Look at this indicator. This is RSI. I have MACD here, and I have a stochastic. This screenshot I have taken around like 9:35 or 9:40 around, when candle was here in the live market, right? I've taken the screenshot. So you can see that RSI is showing you buy signal because it is below 30. It's showing oversold zone, but MACD below the signal line, it is showing you bearish, and stochastic still not showing any signal. RSI is telling you buy, MACD telling you sell, stochastic is neutral. Then what you will do? Will you buy because RSI is telling you buy, or will you short because MACD telling you to short, or you will not take the trade because stochastic is not giving any signal yet? That is what happens when you trade with indicators, because every indicator can give you different of signals, and you'll get confused. Look at this same chart. Okay, earlier chart was September 19th. You can see date was September 19th of September. Bank Nifty 5 minutes time frame. This chart is a 5 minutes time frame, and the next chart which you are seeing here, same chart, Bank Nifty, but only time frame is different. Bank Nifty 15 September 19th. Okay, Bank Nifty 50 minutes time. Chart is same, only time frame is different, but look at the indicator. RSI was telling you buy signal there, now it is neutral, still not properly below 30. MACD, okay, it is here also giving sell, but if you remember, stochastic was not giving you any signal there, but here stochastic is giving you signal. Now what you will do? Will you go with RSI or MACD? Will you go with RSI on 5 minutes time frame, or now 50 minutes? Because 5 minutes it was a buy, 15 minutes still it's not totally given buy signal. Now that is the confusion comes with indicators. Okay, because indicators can give different signals. RSI can tell you buy, MACD can tell you sell, stochastic can be neutral, and you'll get confused, right? Not only that, indicators, every time frame, it can give you different indication also. That is another confusion. That is why I am not a big fan of indicators. I trust pivot points. Why I trust pivot points? Because pivots are stagnant on your chart. Pivot points are stagnant on your chart. What I mean by that? Look at this September 19th Bank Nifty. Where is your R2 pivot? R2 pivot is here. Where is R2 pivot? Look at this yellow label, 27,550.95. That is where R2 pivot in Bank Nifty on September 19th. Just remember this number, 27,550.95 R2 pivot. Now let me take you to the same chart on 5 minutes time frame, Bank Nifty. Where is R2 pivot? Look at this, exactly point to point, 27,550.95. That means pivot points are stagnant. Whether you use 1 minute time frame, 3 minutes, 5 minutes, 15 minutes, 1 hour, pivot points will not change. Pivot points will not give you different level because you change time frame, unlike your indicators. Okay, so that is what I just wanted to tell you, that pivot points, CPR, everything are stagnant. It will not change its levels because you change your time frame. But indicators can be different on different time frame. Now comes the question, why it is so pivot points are stagnant, why it is that indicators are not stagnant? The reason is pivot points, as I said earlier, based on previous day price action. The daily pivot, what you are seeing on the chart are a daily pivot. Okay, this R1, R2, R3, or what you are seeing here are daily pivots. So these pivot points are plotted on your chart based on previous day price action. For 19 pivots, it is based on 18 price action. You know that pivot points, I said, based on previous day high, low, close price. So once previous day 330 market closed, so you can see that once 330 market closed previous day, it makes one high, it makes one low, it makes one close. That's it. It can't be changed, right? Once market is closed, that high, low, close is same. It will not change. That is why pivot points also will not change, because it's based on previous day price action. But indicators not based on previous day. Indicators are based on current day price action. That's why indicators follow price. Okay, indicators look at the price and they give the indication. That is why indicators are known to be lagging indicator. Why should we use previous day? Previous day market over, right? 18th, this is September 18th. Once market closed at 330, it's over. Why should I bother about previous day? Remember, if you are a day trader, 19th is not a individual day. It's not an individual day for a day traders. It is a extension of previous day. That is what you should know. Extension of previous day. That means 19th is the extension of 18th. That is why you see that on your chart. Market most of the time, previous day where it closed, next day it starts from there. Most of the time, not all the time. Sometimes some news may come in and suddenly market opens here or here. That can happen. But most of the time you'll see that it opens from the near to next day close. That is what next day is the extension of previous day. So if you are a day trader, previous day plays very significant role. That's why PDH, previous day high, previous day low, also one of the important support resistances. So that is what I want to tell you, that is why how I said previous day important, your pivot points also important. That's why I said daily pivots are more powerful. Focus more on daily pivots if you are a day trader. Okay. Having said that, I said that I don't believe in indicators much, but you may ask me, then why do I have this indicator? This is the 20 exponential moving average. And you'll see on my chart, many places I use this moving average. You may ask me, why do I use it if I'm not a fan of indicators? Okay, I've been using moving average for a very long time, and this is something I really like it, even though I know that it's a lagging indicator, because you will have attachment to some indicator, right? I'm attached to moving average. Some people may be attached to RSI. Some people may be MACD. Some people may be super trend. So you may have some favorite indicators. So it is very difficult that suddenly you remove all your indicators and start only price action, pivot point, CPR. It's a little bit difficult. So my advice is, like how I still use moving average, even though I know it's lagging, you can also continue using your indicators, whichever your favorite is. But if you ask me, start using pivot points and CPR along with your indicators, and you can see a edge. And if you ask me, cut. And my suggestion is, along with your favorite indicators, also continue using pivot point, CPR, price action, and you can see a edge in your trading, because that is what works most of the time. Okay, so this is what just I wanted to tell you about the difference between indicators and about the pivot points. Okay, now we are going to discuss about more about the CPR. Till now I just gave you the basics. Now let us discuss about some of the secrets of CPR, how you can take help of the CPR in your trading. Remember, there are three types of CPR you will see on your chart. Okay, there are three types of CPR you will see on your chart. First type of CPR is like this. You can see that all three lines, top CPR, central pivot, bottom CPR, all three lines are away from each other. Right, all are away from each other. Very wide CPR. So such type of CPR is called wide CPR, when all CPR away from each other. Second type of CPR like this. Where you will see that all three CPR very narrow. Second type of CPR like this, when all three lines, top CPR, central pivot, bottom CPR, very narrow. Such type of CPR is called narrow CPR. And there can be third type of CPR like this. What is this? This is neither narrow, neither wide, in between, right? Neither narrow CPR, neither it's wide. So in between, such CPR you can say average size CPR or a moderate CPR. So these are the three types of CPR you will see on your chart. Now, having the CPR can give you edge in your trading. By knowing the CPR width, like whether it's wide or narrow, can give you some edge. What is that edge you'll get by knowing the width of the CPR? There are two clues you will get depending on CPR width. Okay, you will get two clues. First clue for wide CPR, the first clue is wide CPR mean it's very strong support and resistance. Anyway, CPR only I said it's a support and resistance, and the wide CPR mean it's very strong support resistance. Okay, so the wider the CPR, the more its strength, the more it is likely to act as a strong support resistance. Okay, so that is what you should remember. Wider the CPR, the more powerful its strength as a support resistance. That is the first clue, right? That means how it's a advantage for you, how you'll get an edge. For example, you know that market opened here on the day where you know that there is a wide CPR, right? There's a wide CPR. Okay, after that market reversed. You can see that after market reversed and it started coming down. Look at the big bearish candles. Look at the candle size. It looks very bearish, right? It looks highly bearish candles. And what you think? You think that, oh, market looks bearish. Look at the back-to-back red candle, and you may go and short here, expecting market to go like this. But you can see that immediately next candle only it reversed. Right, so that is why if you have a CPR on your chart and if it is very wide, that means it's a strong support, because candlesticks are trading above it. So this is not the place to short. You should never short this red candle when it is inside the white CPR or it is above the white CPR. Because white CPR is a strong support, chances of bouncing becomes very high from the white CPR. So this should never be shorted here. So that is what the advantage, that is what the edge you will get, because you know that this is the support and you should not short. As I said, CPR is a place where you can exit. That is a place where you can think about booking your profit. Suppose you shorted here, or you shorted wherever you are shorted, here, wherever at the top, and when price comes near the CPR, you should be ready to book your profit in this region. Okay, this is the region where you need to book the profit. Don't expect to market to go down because there is a white CPR. Here also you can see that white CPR day, all CPR is very white, and you can see that market opened with a bearish candle, then immediately it got reversed from here, started going up, right? So if you went long here, you thought market is reversing, you went long here, this is the place to book your profit. This is the place you should exit, because there is a strong resistance, there is a strong CPR resistance here. So that is the place to exit. Suppose you didn't exit, you expected market to go like this, then see what happened. You didn't book your profit here, came down, again went up, and finally market reversed. It came back to the same place where you bought earlier. So that means all your profit gone. You entered long here. Once market came near the CPR, if you knew that you were supposed to take your profit there, then you would have made profit, right? Instead of losing all the profit later on. So that is what the CPR. So CPR, the wider it is, more strong it is. Okay, that is the first thing. I said two advantages or two edge you will get when you know white CPR. Second one is, whenever you have a white CPR, whenever your CPR is white, you should know that it is more likely market is likely to stay sideways. What actually sideways market? You should know that there are two kind of markets. One is trending day. Trending day means what happens? Market opens here at the one end, keeps going up, keeps going up, keeps going up. That is called trending day. Trending day can be both side, not only upside. Market opens here and keeps going down, keeps going down, keeps going down. This is also trending day. Okay, it can be upside or downside. Trending day means market keeps going down, opens at one end, closes at one end. That is the trending day. Sideways day means like this: market opens, looks like going up, comes down, again goes up, comes down, again goes up, comes down, like this. Okay, this is what known as sideways day. That means there is no direction. For some time it looks like going up, for some time it looks like going down. For example, you can see that it looked like market is going up, came down, again it looked like going up, again came down, again went up. Look at this: market opened with a bearish candle, suddenly started going up, again came down, again went up, and finally closed here. That is what known as range bound day or a sideways day. Okay, like this. So that is what you should know, that white CPR, when you see a white CPR, chances are very high that market can stay sideways. For example, white CPR, chances are very high that market can stay sideways. So that is what white CPR will tell you. So that is what one of the secret of CPR, that white CPR will help you to know that market likely to stay sideways. If you are an option trader, if you are a strategist, option strategist, okay, you like using options strategies for non-directional trades. Non-directional trades mean you expect market to stay sideways full day. Entire day you think that market will stay sideways. If you know the option, if you have a option knowledge, you know that there is a strategy called short triangle, right? Short triangle means strategy where you'll sell out of the money call option and you'll sell out of the money put option, because you are expecting market to stay sideways. That is what they collect the premium here by selling the call option, and they collect the premium here by selling the put option, and they expect market to stay sideways. And if it's an expiry day, you know that all out of the money call and put, almost it becomes zero, and they make profit. Option sellers make profit by selling the call and put on the both side when they expect market to stay sideways. Anyway, this webinar I said, this is not a webinar where I'll be discussing option strategies and all this. Mainly this webinar to tell you how to take directional based trades. This is only for people who know the short triangle strategy. For them, whenever you see wide CPR like this, then there is a very high chances that markets are sideways. So short triangle can be a good option for them. Okay, now I told you about the wide CPR. Second thing I told you about the narrow CPR, right? What is the secret of narrow CPR? What it tells you narrow CPR mean? Narrow CPR mean, first thing you should know, it's not at all strong support resistance. CPR, it is true, it's a strong support resistance, but also it depends on its width. If it is too narrow like this, you should know that it's not a strong support resistance. Many times I've seen price doesn't respect the CPR at all when it's too narrow. Okay, that means you can see that CPR was respected here, CPR was respected here. If the same time, instead of wide CPR, if this chart what you're seeing here had a narrow CPR like this, then one could have shorted this even without worrying about CPR, because CPR is very narrow. For example, you have seen same chart, but it had a narrow CPR like this, then one doesn't have to worry about going long here, because CPR is very narrow, means it's not a strong support resistance. Okay, because it can easily break and it can go like this. But if it is wide, then only I said it's a strong support resistance. Okay, so that means what? That means narrow CPR mean it's not a powerful support and resistance on your chart whenever it is too narrow. Now you may be thinking that, oh, that means narrow CPR mean it is no value at all. I don't have to worry about the narrow CPR whenever I see on your chart. Remember, narrow CPR also have one important significance. What is that important significance narrow CPR have? You remember I said there are two types of the day, sideways day and trending day. Sideways days normally happens whenever CPR is very wide, right? Then there is something called trending day. What is the trending day? Trending day means market opens at one end of the day, keeps going up, and finally 3:30 market closes at another end. That is what called trending day. And trending day more commonly you will see whenever CPR is very narrow. Okay, when CPR is very narrow, you are more likely to see trending day. What about the average CPR? Remember, most of the time market have average CPR. Wide CPR, narrow CPR rare, but average CPR more likely most of the time you will see. So what about the average CPR? What is the advantage or what is the edge? What is the clue you will get? To be frank, average CPR will not tell you much of the things, like it is likely trending day, sideways day, but as far as support resistance concerned, average CPR also very strong support resistance. Not only wide, even average also very powerful. Only if it is narrow, then it's not powerful. Okay, these are the three types of CPR and how you can take advantage of it. Now many people ask me that how to know wide CPR mean how many points. Okay, wide CPR mean is there any points, so that if I can tell 100 points in Bank Nifty, 35 points in Nifty, or 33 points in Nifty, 95 points in Bank Nifty, is there anything like that? Exactly, can I say how many points mean it is wide in Nifty, how many points narrow in Nifty or Bank Nifty? Is there any points? Let me tell you, there is nothing like that. I can't tell you exactly points, how much mean narrow, how much means wide. It's all about looking at the chart and taking the decision. Look at this slide. Do you need any magnifying glass to know whether it's a narrow or wide? Or do you need any magnifying glass to know it's a wide? No, right? Looking at the chart only, you will come to know which is narrow, which is wide. So that is what I said. Narrow, when three lines are close to each other, when it's away from each other, mean wide. If it is between narrow and wide, that means it is average CPR. Okay, so that is what, just remember, there is nothing like exact points. One can say narrow means how many points, wide mean how many, average means how many. But remember, narrow CPR mean it's more likely have a trending day, wide CPR more likely sideways day. If you observe, when I'm talking about this, I use the word likely. Narrow CPR mean likely trending day, wide CPR mean likely sideways day. Why I'm using the word likely? Why I don't say exactly 100%? Because what I said, trading is a probability, not a certainty. Trading is not like an exact science. Strategies, patterns, whatever it is, everything is a probability. It's not a certainty. There is nothing like a mathematics. In mathematics, 2 plus 2 is always 4. It never becomes 3 or 5. That is what known as certainty, exact science. But in trading, 2 plus 2 can be sometime can be 5, sometime can be 3, sometime can be 6. Okay, so that is what trading is. So that means trading is not like a exact science. It's all about probability. So that is what here also you can see that most often, but not always. So that means don't think that narrow CPR means it's like a magic. 100% of the time it's a trending day. Wide CPR means it's like a magic that 100% of the time sideways day. Nothing like that. It is probability. Most of the time, yes. Most of the time. Wide CPR means most of the time, yes, but not 100% of the time. In trading, that's why one should always have probability mindset. Mindset should be probability, not a certainty. That is what professional traders also understand, that fact, that it's all about probability. That's why always they keep stop loss. That is why there is something called stop loss in trading, because trading is a probability. If your trade doesn't work as per your analysis, then you should have a stop loss so that you can close your trade, accepting that your analysis went wrong, trade didn't work, and take the stop loss and close the trade. Look at this on 8th, you can see that market opened with a big bearish candle, kept on going down, kept on going down. It's had a trending day. Next day, what happened on 9th? It opened with a bearish candle, but after that market stayed sideways. Right, there was no trend. Both days you had a red bearish candle, both days, but one day led to trending day, another day led to sideways day. That is what CPR can give you, that edge. So when you see narrow CPR starts with a red candle, if it breaks the previous day low, then chances of trending day becomes higher, but not 100%. So next day what happened? Again you have seen bearish candle. Then your bias should not have been towards the trending day. Your bias should have been like a sideways day because of the wide CPR. Now let me tell you another thing. Many people think that trending day means, oh, look at this. Had they bought put option, maybe 100 rupees, it could have become 100 rupees, could have become 300, 400 rupees, because there was a huge trending day, right? Option buyers who bought a put option, he would have made a huge profit on 8. But next day, if he had bought put option again here, looking at the red candle, expecting market to go down like this, but what happened? It didn't go down. It started staying sideways. And that person bought out of the money put option, and if it was an expiry day where options out of the money become 0, whatever the premium he paid, it would have become 0. Right? Whatever the 100 rupees, 150, 200, whatever the premium he paid, at the end of the day, he must have lost all the money, right? That option would have become almost 0, because wide CPR mean you should have thought it may be a sideways day. Now another thing, trending day can give you huge profit potential, because market keeps going down, and if you bought a put option, you could have made a huge profit. But sideways days, see, it didn't go down. And if you bought out of the money put option, if it was an expiry day, you would have lost. Many people become very big fan of trending day, not sideways day. Many people think that they want to become an expert in trending day so that they can make big profits. Not bad. I'm not saying that you can't become an expert in trending day, but if you ask my opinion, which one is my favorite? I prefer trending day or a sideways day. My answer is I prefer sideways day. You may be surprised to hear that I prefer sideways days more than a trending day. Simple reason that how many days in a month? 30 days in a month. Remove Saturday, Sundays. You may see around 22 trading days in a month because Saturday, Sunday market closed, right? So out of 22 trading days in a month, you will see trending days only 4 to 5 times. So that means this kind of the day only 4 to 5 times. Remaining 17 to 18 days, market stays sideways. Okay. So that means most of the time market stays sideways. That is why I said I am a fan of sideways days, because being a day trader, I need to trade, if not every day, at least you need to have opportunity, right? So if you are a day trader, then you should know that if you are trading especially Nifty and Banknifty, I am giving the example of indices, that is Nifty or Banknifty. Okay, yes, swing trading, positional trading, I trade in stocks, but day trading mostly I prefer indices, that is Nifty, Banknifty. So that means Nifty, Banknifty, most of the time it stays sideways and very rarely it goes in trending day. So that means you should be expert in sideways days also. You should know how to trade sideways days. Okay, so that is what very important. You should also know how to trade on sideways days, not only on trending day. This is the trending day and previous day was a sideways days. And you may think that sideways days, how to make money? It is staying sideways like this. Remember, there is something called initial balance in trading. For day trading, okay, initial balance means first 1 hour of the day. First 1 hour of the day. What is the first 1 hour? On sideways days, market trades between the range. It makes 2 range, and most of the time market stays between that range. Okay, what is that range? That is what I said, initial balance. That is the first 1 hour. First 1 hour of the day. So you can mark first 1 hour high and low. For example, 9:15 market open, 10:15 market here, then this is your first 1 hour high, first 1 hour low. Most of the time you will see market trading between 2 ranges. Okay, so that means entering either of the range can give you good trades. Okay, look at this, market opened with a bearish candle, then started going up, coming down, went up, coming down. Okay, this is the first 1 hour low, and you can see this is the first 1 hour high. So this is what market likely to stay between those ranges, and we'll discuss more on that in the second session, where we'll discuss about the patterns and strategies. And you'll see that I have also patterns and strategies on how to trade on sideways days. Okay, now we'll discuss about the virgin CPR in this slide. We discussed about the narrow CPR, we discussed about the wide CPR, right? Now let us discuss about something called virgin CPR. What actually virgin CPR? Virgin CPR mean on any given day there is no candlestick inside that CPR, then it is known as virgin CPR. You can see there are no candlestick inside. So this is your virgin CPR for the next coming days, not for the current day. For the next coming day it becomes virgin CPR. Why next coming days? Why not for the same day? Because look at this, 3:30 anyway market, you can see that no candles entered inside the CPR. But in the live market, when market is live, before market close, anything can happen. It may be till 3:15, 3:20, it was a virgin CPR, but suddenly one candle can come and last candle of the day can break it. So this is no more a virgin CPR, because entire day till 3:15 it was a virgin CPR. Finally it broken it. So it's not a virgin CPR. That's why wait till 3:30. Once market is closed, then look at your CPR. If there are no candlestick means next day it becomes virgin CPR. What I do? I go and mark a box like this, and that box is my virgin CPR. Okay, that box is my virgin CPR, and virgin CPR also nothing but your support and resistance. Like current day CPR, virgin CPR also your important support and resistance. So I look for the candlestick pattern near that virgin CPR. If I see that bearish candle, near the virgin CPR, so that means it is resistance. So that means there is a selling pressure. So chances of market going down higher. So if I see bearish candle, I can short, keep my stop loss above that virgin CPR. Okay, we'll discuss more about the virgin CPR when we go to the second session where we have a strategy for virgin CPR. But couple of things you should remember. Virgin CPR stronger when it is new, it becomes weaker and weaker as it becomes older and older. What I mean by that, let me just brief it. For example, you can see that there was a virgin CPR here. Okay, there was a virgin CPR here because that day market stayed below that CPR, so that becomes virgin CPR. So next day you mark this, right, because that is your another support resistance. Assume that next day also market stayed. This is the day 1. Next day is day 2. Day 2 also market didn't enter that virgin CPR. Again you will mark it for day 3. Day 3 also market stayed below this. Then next comes day 4. Day 4 also market stayed. Next is day 5. And then market kept on going down. You mark it here. Then next day also it is still valid because you can see that there are no candlestick inside that virgin CPR. This is the day 6 and market is going like this. Now how many days you will keep marking it? Day 1, day 2, day 3, day 4, day 5, day 6. Will you keep marking it forever? No. Will you keep marking it forever that it is still valid? No. That is what I said. Up to 5 to 6 days only I mark it. If price did not enter inside that virgin CPR even after 5 to 6 days, 7th day onwards, I don't mark it. I leave it. I don't mark it again because virgin CPR is very strong when it is new within 5 to 6 days. After that, it becomes weaker and weaker. That is what I mentioned in the slide. Okay, I'll show you with the chart again in the later slide, but just remember this. Virgin CPR stronger when it's new, becomes weaker and weaker as it becomes older and older. Virgin CPR generally works best at opening session compared to late afternoon session. Let me explain this also again, what actually I mean by that. Look at this. Previous day was a virgin CPR, right? And I mark this box. Okay, I mark this box. I mark this box as a support resistance. Forget about this candlestick. Forget about this price action for a moment. Assume that on 4th, market opened here. Okay, market opened like this. Then finally around 2:30, market went near that virgin CPR and then made a bearish candle. Will I short here this red candle because now it came near the resistance? Will I short? I will not be interested to short. I will not be interested to short because it's a late afternoon. Breakouts are very common in late afternoon. Many times I've seen it easily breaks the virgin CPR. It will not respect virgin CPR. Instead of reversing, it keeps going up, breaking the virgin CPR. That is what I mentioned here. Virgin CPR generally works best at opening session compared to late afternoon session. Okay, for example, look at this first candle at the opening session only, it's showing bearishness. That means it's a high probability. I will go and short this bearish candle and I'll keep my stop loss above the virgin CPR, expecting market to go down. Okay, now you may be thinking that what is the opening session, late afternoon session? According to me, opening session, I say first 1 hour. I consider first 1 hour as a opening session, 9:15 to 10:15. Then 10:15 till 1:30, I consider as a mid-afternoon session. 1:30 to 3:30, I consider as a late afternoon session. That is what I consider it. Okay, so there is no rule that everyone has to consider exactly like that. Some people say opening session is first 30 minutes. So there is nothing right or wrong. It's totally up to you. But I consider first 1 hour as a opening session. So that is what first 1 hour I give important to virgin CPR, not after that. Okay. And look at this, how narrow it is, where you will not see even entire 3 lines properly. If there are both all top CPR, bottom CPR, central pivot at the same point, then you may not even see exactly like a CPR. Here you can see CPR, all 3 lines, but look at this. It looks like a single line, right? This is also CPR. It can be narrow like this, and you can see that price is not respecting at all. But trend, you can see that it was a huge trending day and it was a narrow CPR. Okay, now coming back to this slide, how to know your CPR? For example, CPR pivot points, I said it is based on previous day, right? Daily pivots and daily CPR, previous day price action. That means next day CPR pivot point, you will come to know next day pivot point CPR the moment market closed. For example, Monday 3:30 market closed. Next day, where is your CPR? Where is pivot points? You can see 1 day before only. Even though Tuesday market opens at 9:15, but Monday after 3:30 also you can see where is your Tuesday, that instrument it's going to have its CPR or pivot points. That means you can see CPR pivot points well in advance before market opens. How to know that? For that, there are 3 ways. There are 3 ways to know where is your CPR. One is you need to have TradingView account. TradingView is the charting platform where you can get the CPR. If you want to know from where to get this CPR, because many platforms don't have CPR on their chart, but TradingView is the one platform where you can get the CPR. If you want to know how to get this CPR, just like how I'm having it on chart, what you can do after watching this course, then you can send me an email and you can ask me for video on how to set up CPR in TradingView chart. I have a small video which I can share it with you, and you can watch that video and you can plot same kind of CPR where you can see on this chart. Just like my CPR, you can also plot it on your chart. But for that, you have to send me a separate email requesting for video on setting up CPR in TradingView. Okay, otherwise there are so many CPR available in TradingView, and I assume that all of are same and you can use anything. But if you want to use same CPR which I am using, then you can send me an email. Okay, that is the one thing. You can have a TradingView account and you can open and you can find a CPR there. Okay, and you can see that all my charts in this course are from TradingView. I use TradingView platform. You can see that it is from TradingView. All the charts which are seeing in this course are from TradingView. Second thing, you can calculate CPR with the formula. Suppose you don't have TradingView account. Okay, you don't have a TradingView account with you. Still you want to use CPR. Is it possible? Yes. CPR can be manually plotted also. For that, there is a formula. Okay, you can manually calculate that on an Excel sheet, and you can manually also plot lines like this. You can plot CPR lines manually if you don't have TradingView software. And third thing, you can also just take a guess. You may not be knowing exact level where CPR is, but you can take a guess whether it's a wide or it's a narrow. Okay, you can take that guess whether it's a wide or it's a narrow CPR going to be. How? For that, I set pivot point CPR based on previous day price action. If previous day, for example, Monday, assume that market had a big trending day, okay, huge trending day like this, you are likely to see wide CPR on your chart. So trending day leads to wide CPR. Suppose someday market was like this, very sideways, and 9:15 opened here, 3:30 market closed here. Next day you are likely to see narrow CPR if market is range bound. Look at this trending day, right? Next day what happened? Wide CPR. And wide CPR day it had a sideways days. Next day it was kind of narrow CPR. Here also you can see that it was a sideways days. Next day what happened? It had a narrow CPR. Okay, so that is also, you can take a guess based on previous day price action. Coming back to virgin CPR, This is also virgin CPR. You can see that no candlestick inside its CPR for the entire day, right? This is also your virgin CPR because no candlestick. But if you ask me, this is more powerful virgin CPR, not this. Why? Because this is wide virgin CPR, right? Very wide. So as I said, wide CPR is very powerful. Virgin CPR also, if it is wide, very powerful. Narrow CPR not powerful as a support resistance, and even narrow virgin CPR also not a powerful support resistance. Look at this. It was a virgin CPR. Next day what I'll do, I will go and mark that level. I mark that level next day. Look at this. 10th, what happened? Day opened with a bullish candle, giving you impression that it is going to go up like this. But what happened? It's still stuck. You can see that it's not able to go up. It is still stuck. Why? Because there is a virgin CPR. Okay, there is a strong wide virgin CPR. So this is entire level is strong resistance. If you knew that concept, then you would not go long here because you know that there is a strong resistance. But if you don't know about the CPR, if you don't know about the virgin CPR, you may take a long trade here expecting market to go up, and you are thinking why market is not going up, why it is staying sideways, because there is a wide virgin CPR resistance. This is not a virgin CPR. Okay, you can see that so many candlestick inside. You can see that so many candlestick inside. So this is not a virgin CPR. There are candlestick, not a virgin CPR. Sometimes you may see only wicks. Sometimes you may see only wicks inside like this. No candlestick but wicks. If you ask me, still can consider it as a virgin CPR? Yes. Still you can consider as a virgin CPR. And I call it as a partial virgin CPR if there are only wicks inside it. Okay, I consider as a partial virgin CPR, but as long as support resistance concerned, still partial virgin CPR also very strong support and resistance. So with that, now we are coming to the formula. I told you that pivot points are calculated based on the formula of previous day high, low, close, and this is the formula. This is the formula for central pivot for R1, S1, R2, S2, R3, S3 pivots. But previous high means what? Previous day high or previous week high? That depends on which pivot. Suppose you want to calculate daily pivot, then it should be previous day high, previous day low, previous day close. If you are plotting weekly pivot, then it should be previous week high, previous week low, previous week close. If it's a monthly pivot, yearly pivot, same thing. And then you have to divide it by 3 to get the central pivot. And for R1, S1, R2, S2, this is the formula. But as you know that pivot points are available in almost all the platform. I think almost all the platform charting software, they will give the pivot points. So you don't have to manually. Pivot points are available in almost all the platform. I think almost all the platform charting software, they will give the pivot points. So you don't have to manually. Pivot points are available in almost all the platform. I think almost all the platform available on the charting platform. But only for people who are interested to know how to calculate pivot points. Because almost all the platforms available on the charting platform. I said it's not available. But only for people who are interested to know